Today is Thursday, October the 3rd, and I'm going to show you something different. This is the mini futures, the S&P 500 index mini futures that shows you on the New York Stock Exchange and the NASDAQ. The advancers to decliners was 2.2 to 1 on the NYSE, and on the NASDAQ 2.68. So this is more finely looking at Dow stocks and NASDAQ 100 stocks, as opposed to the thousands that FinViz looks at. But there's also some stuff laid over here. You can see that we never hit yesterday's prior high, but we did exceed, right down here, we did go below the Globex low. The Globex low is the lowest that we saw since the market closed yesterday. So because the ES futures trade 24 hours a day, the Globex low is the lowest that we see traded from yesterday's close to current, and that was the low right there. Or sorry, yesterday's close to the open. So that was the low, and we exceeded the low. We did not hit the prior day's trading high. I'm going to get rid of these Fibonacci's the next time, so we'll just look at these two key numbers. So now let's look at FinViz. And you can see that volume was a little disappointing in the Dow, pretty reasonable in the NASDAQ, a little light in the S&P 500, as you'd expect, a lot of red, although advancers led decliners by a factor of pretty much almost 2 to 1. Let me refresh that. There you go. Now it's all green. That didn't seem right. But the advancers and decliners stays the same. The charts stay the same. For some reason, that didn't update. So the Dow fell below yesterday's close and then finished slightly above. Same with the NASDAQ, fell below, finished slightly above. So it looked bad early in the morning. When you see the kind of things that are going on in the market and the kind of uncertainty about the economic outlook, the impeachment, the trade, manufacturing indexes, after the big drop we've seen the last 2 days, it's not unusual to think that people would be a little bit nervous. And there was some shakeout here. When the sellers came in, they were trying to see how much panic they could create, and it was temporary. The panic only lasted 15 minutes, and then the market resumed. So let's see what that means for tomorrow. The market oscillator yesterday fell, not to its lowest point in the last 12 months, in fact, not to its previous low point, and now it'll pull back up to just barely probably the oversold median line here, but it doesn't mean that we're done. We can still see it go down further, but it'll be back on a trend up towards zero. So now let's look at the charts. The S&P up 23 points. I'm thinking, and I drew this before the video, I'm thinking that we're going to see some sideways motion drifting upwards. We're going to hit this gap, and there's going to be sellers at the gap here. That's my thought. We did see us pierce the 200 during the day, and I'll bet you that was in that 15-minute period. And let's take a look, and that's exactly what it was. There's that rough 15 minutes where we blew past the 200 daily moving average on a 15-minute chart, and then there weren't enough people that were spooked by that, so the buyers stepped in, or the sellers stopped selling is more like it, and we resumed an upward move. So let's go into Caterpillar. Little bit of good news for Caterpillar. I still think that the cloud is going to present some kind of a resistance here. So I think we're going to move around the cloud, but eventually we're going to start to drift up, particularly if there's any good news on the trading front, or Trump has got to do something to deflect from this impeachment. He's in a bit of a box because he can't make a deal with China that doesn't make him look really good. The Chinese are not going to give him a deal that looks really good. He's gotten himself into a mess now with Europe. The only thing he can do is spend money, and maybe he could come to an infrastructure deal in return for a DACA deal. Who knows what the guy is going to do, but he's got to do something because his poll numbers are tanking. GDX Look at GDX getting support right here for the Chiku span on the 50. Dead support. It bounced off it earlier in the day when I put this little arrow in there, but today it stopped dead on there. It's a good stock to hold. I like it. I still think it's in a general upwards trend, but it's in the cloud, so it's going to see some turbulence. T up 10 cents. I still think we're in a trajectory to come down and get support on the cloud over the next 30 days, and that's why I'm half a position, but I would like to increase that position if I can get a chance to buy it cheaper and get in on the dividend. Believe the dividend date is coming up fairly soon. Let me just tell you, it's a 50-cent dividend, which is quite nice. And the dividend is 51 cents, and it's on the 9th of October, so some point next week, it's going to go ex-dividend. Whirlpool, I still think we're moving down. Resistance on the 8. Like to see it get support on this trend line. I actually like to see it lose the trend line and come down to the cloud and get some definitive support so I can buy back into it again because I like it. But I've got a couple of others I want to show you here. Google. Let's take the Ichimoku off Google and see how Google is surviving this wave. This is a big wave, and we had this big pullback to 78.2 where it churned around. Then it moved up and stalled here. End of July, that was probably earnings time. People taking profits. We came back to the 50%. We recently came back today to the 50, so to the 200 SMA after getting rejection on the 50. So this is a technically traded stock right now. If you're into Google, probably not trading it at $1,200 a stock, but maybe you're into the options. I would say that movement on Google is upwards once it gets past the 50. So some options that expire at the end of January might not be bad. I'm not doing that, but you might want to. The other one I wanted to look at, we've taken snap out of there, is Amazon. Nothing much to see on the Chiku span, or the Ichimoku. So let's look at the weekly. Aha, the weekly. The Chiku span gets a stop on the 8 EMA this week and bouncing off the weekly cloud. So we could see some good stuff here for Amazon. Again, an expensive stock. If you're buying 100 shares of this, you've got $190,000 to spend, $173,000 to spend. So you might be doing it with options or with vertical bull calls, or selling puts, selling put verticals. So that's pretty much a summary. So what does it mean? Churning, still uncertainty in the market.